Hello and welcome. Thanks for joining us and thanks for your interest in Marshall Reddick Mortgage Fund. My name is Patrick Prunty, Director of Private Lending with Marshall Reddick, and I'll be your host. The main focus over the next 30 minutes will be to introduce the mortgage fund basics, and we'll do so mostly through a detailed tour of our fund website. But before we go any further, let me introduce two close colleagues, Vince Tomich and Evan Balsas.
Hi there, Vince Tomich here, Realtor, Advisor, and Marshall Reddick Mortgage Fund Specialist.
Hey everyone, Evan Balsas here, Realtor, Advisor, and also Investment Sales, a part of the Mortgage Fund.
Awesome. Before we get going into the Marshall Reddick Mortgage Fund, who is Marshall Reddick? Marshall Reddick is a professional real estate firm offering our services, investments, and education. Our services include brokerage, which we help people buy and sell whether they're primary or investment property. We have our property management wing, which we do full service property management, as well as our private financing. Our investments include real estate ownership and private mortgage lending. And our education, all is free, includes our consultations, events, webinars, and articles.
Thanks, Vince. Taking a step further, specifically with regards to our mortgage investments, Marshall Reddick Mortgage Fund is an investment offering. As for education, we hold these types of webinar events, of course, free of charge, so you guys and clients can get familiar with what we do, how we do it, etc. Many of you have already connected with Vince and I, or also Pat, which is great. But we're here to field questions, communicate with the audience, and also connect with you guys over the next week or so via telephone or Zoom to gather one-on-one consultations, get your guys' feedback and questions answered, and to help you guys continue with your due diligence.
Awesome. Thanks, Evan. Thanks, Vince. Pleasure again to be with everybody, as always. And I'd like to get started. We're going to dive into that detailed tour of the fund website. So we've got the Marshall Reddick homepage up on the screen. And very easy to navigate to this website. Most of you, I'm assuming, have already found it. But simply hover over Invest and click on Investment Fund. This page is geared 100% towards helping folks decide and conduct due diligence on Marshall Reddick Mortgage Fund. We're going to start basically from the top and we're going to work our way down. So top and right in front, right? Annualized return. So currently we're returning 8.875%. And the corresponding graph above that return number shows the distributions that we've put out each quarter. Right? So quarter one, 2020, 2%, 2%, 2.25, and 2.25. Also would like to point out for everybody that a lot of these graphs and these metrics have tooltips. And if you're unsure what that is, look for the question mark. So for example, if you're interested in more details on this 8.875%, which again is an actual and a live number, you go ahead and click on those tooltips. And it's going to actually give you the formula, if you will, but also will give you more details in terms of what's actually going on here. So utilize those tooltips. Separately, moving to the right, we have at the end of last quarter, right? So the end of quarter four, we had approximately $4.2 million in total investor capital. Again, the corresponding graph above that is going to simply be a running total of the amount of capital. These first two metrics are the only two metrics on this page that are going to be updated at the end of every quarter, so only once per quarter, right? So the $4.2 million was as of January 1, 2021. We're currently approaching $8 million, and that number is rising weekly. A lot of that due to this presence on the website. But we've had a lot of interest in this and a lot of questions about this website, and we wanted to take the time to take this detailed tour. So moving along, the next two metrics here on the right-hand side of the screen, as well as the remaining metrics we're going to talk about, are updated in real time. So currently, we have 65 active mortgage investments, okay? And how many of those were originated or were funded in each of the prior quarters? Moving on to our default rate, we currently have no defaults. We certainly will, right? Defaults are part of lending money. But what we've decided to do with this fund is just have 100% transparency. Show what our annualized return is, show how much capital we have under management, show how many mortgage investments we have, and to show what our default rate is, right? These are important metrics that any investor considering investing their hard-earned savings should know and should have access to. I also like to point out too, I get a lot of questions from time to time about lates or delinquents or who's in default. So again, we're taking that transparent methodology and we're going to be showing. So of the 65 current active mortgage investments, we have 65 of them current. Again, an impeccable record, but we're just getting started. As I move down the page, right, we're going to kind of get into some of the nuts and bolts, right, the fund information. And notice that there's going to be several tabs here. So it defaults to the structure, and I'll just spend a few minutes here. So this Marshall Reddick Mortgage Fund, it's a Regulation D 506C private placement, right? It's a small private fund, right? We have a maximum capital raise of $100 million, and we're taking a very, very slow approach to raising that capital, right? There are no load fees or investment fees. Whatever your investment amount is the amount credited to your capital account. As you click through these, you're going to be able to read through and understand the purpose of this fund, the strategy behind this fund, and of course the documentation that comes with this fund, right? So our business plan in this type of fund is called a private placement memorandum, and these are all here for your ability to download and conduct further due diligence. Going back to quickly touch on the purpose of this fund, which I think is one of the most important things to understand, is capital preservation, but to provide a safe and consistent stream of income. Again, safe and consistent. Our distributions are paid quarterly. As far as we go moving down into the fund management team, right? It's amazing to say that come June, I'm going to be celebrating an 18-year anniversary with Marshall Reddick. The same goes for my colleagues, right? Ross Nelson and Scott Pastel. We're talking long careers with Marshall Reddick and some of the hardest working folks I've ever met and the smartest working folks I've ever met. Each of us brings a unique skill set to the table, and due to the longevity of the careers that we've had at Marshall Reddick, we've done just about everything related to residential real estate investments. Moving along, I'd like to dive in deep here to the transparency again offered with Marshall Reddick Mortgage Fund. So we talked about above here that we currently have 65 active mortgage investments and growing, but what are those, and specifically, can I see those 65 and however many at any given time? And the answer is absolutely yes. So in this Explore the Mortgages in the Fund page, notice that you can toggle between active mortgages and active versus completed mortgages, because we make a lot of short-term and long-term loans. So completed would indicate those that have been paid in full. So if you make that toggle, right, it's going to show you that we've actually had 100 mortgages total with 65 current, so we've had 35 pay off so far. Getting back to the active mortgages, notice that you can filter with a lot of different criteria here to understand. Currently, I'm looking at, and what the default is the active loans, so those in these loan statuses. Notice that you can also sort by loan amount, yield to maturity, and so on and so forth. You also can reset your filters back to the details. And if you'd like a little bit more than the thumbnail that you get here, realize, as many of you have seen before, that each of these mortgages has a detailed mortgage listing. It's it's almost like we have a multiple listing services, but for loans instead of properties. So this specific mortgage has all of the details that one might like to understand in order to understand what this asset is that's owned by the fund, that is that debt that's owned by the fund, right? What's the investment capital? What's the yield to maturity, the lien position, and so on and so forth. This includes loan to values. This includes photos of the subject property. This includes the underwriting team's evaluation on value, so on and so forth. So understand that this level of detail on the actual holdings of the fund is available to you in real time. One of my favorite parts about this page is the map or the geographic view, right? So again, if I'm currently looking at the 65 mortgages held by the fund, very important when you get to thinking about, diversification, and you get to thinking about, this type of fund and what it actually holds, right? In this situation, these numbers in each state add up to those 65. So you can see that we're well diversified across the geographic map. You can also see, for taking that just a step further, in terms of our active borrowers, note that we have 65 current loans, but we have 42 separate borrowers. So some borrowers have more than one loan outstanding with us, but there's not any one borrower with a very large percentage of the debt held by this fund. There's not any one state with the same amount of debt or an overwhelming amount, right? These are all metrics that an investor will need to understand to decide whether Marshall Reddick Mortgage Fund is the right investment for them. Probably my favorite metric, and one that helps me sleep really well at night, is going to be the aggregate loan to value, right? So we're talking extremely low loan to value, which is a testament to the safety offered by this fund, right? Again, this is a very safe, very methodical, first lien position debt fund, right? Again, don't forget those tooltips. If you want to dive in and understand where this number comes from, what the math formula looks like, and so on and so forth, we've taken a great level of detail to put this information here for your understanding. Also note that if you're interested in what's exactly in those particular states, like I'll use Oregon, for example, go ahead and take a click, right? This is going to show you that indeed we have that one mortgage, the aggregate loan to value, about 30%, and what the loan amount is. I'll give you another example going to our largest state currently, Florida, right? So we've got 13 mortgages, 65% aggregate loan to value, and a total of $2.7 million outstanding within this state. You can also click on these from this level to again dive into that specific mortgage listing if you'd like to know more. Moving back to our page here and down to some additional metrics that I feel are important for everyone to understand. Let's talk about diversification further amongst loan amount, property type, loan term, and lien position. So in terms of loan amounts, right, you can see well diversified across $0 to $100,000 loan amounts, approximately 33 or around half, right? And then we have a few above $1 million and so on and so forth. Property types, those of you who know Marshall Reddick know that we're very much residential real estate, mostly single family homes, right? Big market for those, right? Easily tradable in the event of default. And we have very few when it comes to other different property types, land, +5 unit apartment buildings, or small multifamilies. As far as loan terms, again, staying well diversified with different periods of time. Right, we make a lot of different types of loans, right? Short-term loans and long-term loans, but we have a good mix of both, right? With different maturity dates helping us maintain liquidity as we continue to operate this fund. And lastly, my favorite, again, harping on the super safe nature of this fund, we only do first lien position, right? So there'll be no style shift as long as I'm managing this fund. Right, first lien position is the only place to be when lending money. It doesn't matter. You can be offered a 20, even a 50% return on your investment. It's not worth taking a junior position in that property. I'm going to move down a little bit further, and I'm going to get to our historical performance. So the fund is, it's new, right? It's been operational for 1 year today. And we're showing our quarterly distributions as well as our total investor capital, total number of investors, and so on, right? So these are going to grow. So as you can see, as the fund has continued to operate, we continue to raise capital, take on more investors, but we're still able to hit our target returns. Our target return in this fund is an 8% number. So again, we're currently exceeding that number, but we plan to continue to do so. And all signs point to having no problem being able to do that in a very safe manner. So know that at the end of every quarter, we will update these metrics. So the quarters, for everyone's information, are the standard quarter end. So our next quarter, which is quarter 1, will be ending on the 31st of this month, and we'll move into quarter 2. So the distributions are published about 2 to 3 weeks following the end of each quarter. So around the 3rd week of April, you will see the next population of data to show quarter 1, 2021. Will probably be north of 8 million at that point in time. We're currently about 7.7 million as of Tuesday, and we were currently at 79 total different investing entities. So we have about an average investment right now, just a hair under 100,000, about 95,000. We have plenty of people coming in at the minimum, right, at 25,000, and we have people coming in at $1 million. Right, so there's a spectrum across the board for everybody based on your net worth and your specific scenario. And remember that Vince and Evan, as those investment specialists for Marshall Reddick Mortgage Fund, are there to kind of counsel with you and help you walk through and decide what's the right investment for you, and so on and so forth.
Awesome. What you're going to notice here is the Invest Now button. So what the Invest Now button tells us is that you'd like to talk to Pat, Evan, or myself. You'd like some kind of consultation. So I'm going to have Pat go ahead and click on that. And what it's going to bring up is basically our phone number that you can always call. Also, what you're going to have is the ability to log in. So the login is going to allow you to register and get into the Marshall Reddick website. So once you do log in, you'll go ahead and be able to submit an inquiry. We will be able to receive that, and we'll be following up with you with at least within 24 hours and be able to have that consultation or answer those questions. Also, another piece that I'd like to point out is if Pat would scroll up just a bit, on the right-hand side of the screen, you're going to see a Learn More section. So for some of you folks who enjoy maybe articles or something to read, we have an awesome article, very short but concise description of the fund and all of the workings of it. For those of you that and you would just be able to click there and that would pull up and you'd be able to read that. Right below that, you'll also see that we have a hour-long webinar. This has a little bit more history on the details of our private lending from our guidelines from the borrower side, the lending side. It's definitely a bit more detailed and something to look at if you're also interested in that kind of learning is helpful for you. One other section is, Pat would scroll up, thank you. There is the investor login. So if you want to go ahead and click that, the investor login is what you as a Marshall Reddick Fund investor will be seeing once you have gained access to this. So I'm going to have Pat go ahead and show an example. So once we go ahead and log into this, you're going to have your email and password to get into the fund portal.
Before we go any further, Vince, those of you conducting due diligence who are not yet fund investors, right, if you want to gain access to this investment fund portal, you can prior to actually becoming an investor. If you want to do that, you do so by either speaking to Evan, Vince, or myself who can set you up, or you can visit this page just as we did. Go ahead and click that investor login. It's just going to take you to this screen, and you can go ahead and hit sign up. You would sign up, right? Just simple info, first, last, phone, email, and request access. we would then grant you access to a user and password where you'll get to this screen and be able to log into your investor portal. There won't be a lot of information there until you become a fund partner, but you're still going to be able to gain access prior to kind of see what it looks like. But I think what Vince was diving into there is once you have become a capital partner, right, this is a website and a login where you're going to be able to track many different things. So we're going to go ahead and log in and show you what exactly that looks like. So I'm logged in now, and it defaults to the dashboard. And so this particular investor, right, this happens to be my father's account, right? He's got a $100,000 principal investment in Marshall Reddick Mortgage Fund, and he's opted to take the distributions and automatically reinvest them. So his total contributions are now 106, 136, 11. Right? And the difference between his $100,000 initial principal and his distributions over the last several quarters are just added to his capital account in terms of his contributions. As far as moving over here to the left-hand column, right, you could dive into the tax forms, right? So we published your K-1 here. If you needed to update us with a new W-9, that would be something else that can be accomplished here. As far as tracking and understanding and organizing or taking advantage of tracking your distributions and contributions, easily done in the distributions and contributions section here on the left-hand side. I'll show you quickly what the distributions look like. So my father was one of the first to kind of join us back, late last spring and into the summer. Right, so he had a quarterly distribution following Q2, following Q3, and then of course following Q4 just about a month and a half ago. As far as his contributions, right, again, he opted for the automatic reinvestment, so those same numbers show here under his contribution section to get into his total. You also have the ability to contact us, and you also have the ability, if you prefer not to take the distributions and automatically reinvest them like a stock or a mutual fund, you can go ahead inside your profile, you can click into your investing entities, and you'd be able to input your payment method, like your banking credentials, so that we can actually ACH deposit your funds directly into the bank account of your choice following each quarter. So that's just a little brief overview about the investment fund portal that each capital partner will gain access to as a part of becoming a partner. And of course, we'll have this access throughout the term that they choose to stay into the fund. One main thing that we didn't touch on that as we move back to the page here and we move forward is the fact that this is an evergreen fund. Okay, this is a fund that doesn't have a defined capital raise period, so we're not in a rush to raise capital. In fact, we're taking a very, very slow approach to raising the capital so that we can deploy it into really good, solid first lien debt and get all of the kinks worked out before we just go straight to 100 million and break the system. All right, I'm going to move down a little bit farther, and I'm going to bring on Evan.
So for those of you that are visual learners, this is definitely my favorite part of the website. But let's calculate what your investment growth would be, right? So Pat, if you do the initial investment, let's say if you guys wanted to invest $250,000.
Okay,
right?
So an initial contribution of $250,000.
Mm-hmm.
Okay.
And let's say you guys want to fund that monthly and let's do $1,000 a month.
Okay, so additional contributions on top of the initial investment.
Mm-hmm.
And you said 1,000 a month?
1,000.
Okay, 1,000 additional contributions per month.
And let's keep it at a 5-year hold.
Okay. Well, the default rate here is 2%, which is what we've been able to return and what our target return is. Note that that could be changed. But given these metrics, Evan, I think we're looking at a pretty nice return.
Do you want to show them 2.25 of
Sure.
what last quarter was?
Yeah, if we were to toggle this, like you obviously have the ability to lower it, but you also have the ability to raise it and understand what the difference would be. This is a dynamic calculator that, based on your situation, whether you want to reinvest or withdraw what you think the returns could be, is an ability for you to understand what your total capital could look like.
Great. And then let's try another example. Let's do for initial investment, let's do just the bare minimum. Let's just do $25,000.
Okay.
And then instead of doing a monthly, let's do a $2,500 yearly.
All right, so 2,500 additional contribution, and we're going to do that annually.
And then switch it for, instead of 5 years, let's do 30 years.
Okay, so 30 years, kind of like a retirement play, almost like an IRA or a 401k contribution, starting with 25, expecting to earn 2.25% per quarter over 30 years. Wow, $716,000. I wouldn't mind having that.
No.
Right. One of the cool parts about this calculator too, I know, going back to using my father as an example, he's very much a visual guy, and he likes to see it actually printed out on paper. So one of the cool parts about this calculator that we have here is that you have the ability, when you toggle it, right, if you actually want to take a look at it, you can go ahead and use that little button there. I hit at the bottom. I'll show you again. It's right this here, print a PDF, and you can actually go ahead and print this off, share with friends, family, and so on. You also have the ability here to copy this if you want to share it with other folks over email or text or something of that nature. All right, so I'm going to move on. Thanks, Evan, for the calculator analysis. One of the best parts about this. And get this back on. Folks, thanks for being with us. We're going to get to Q&A here shortly. And before we do so, kind of just some house cleaning, some nuts and bolts, some fund details, if you will. So understand that due to the 506C nature of this fund, we can only take subscriptions from accredited investors. That's one of the #1 questions I get, and we're going to get to details on what is an accredited investor and what you actually have to show in order to be an accredited investor. Also mentioned a couple of times already that the distributions are quarterly, right? They're not monthly, they're quarterly. Also, the reinvestment option is a really cool feature here compared to like direct lending or actually like buying notes and things like that, especially for those folks using self-directed retirement accounts. I mean, obviously getting monthly income is great, but in a self-directed retirement account, it's like you take the income and it sits in that custodial cash account and you don't have the ability to use it. So the fund brings in that ability to add that quarterly distribution back to your capital account, right? So that you take advantage of some of that compounding return over time, which, as you know, Evan pointed out on our fund calculator, can really have a dynamic effect to helping you build wealth.
There's just no downtime, which makes it great. So
absolutely, absolutely. Now understand too, right, that the return on investment is a function of two things. #1, we have a preferred return, right? And this is paying the investors, the capital partners first. So obviously the fund has to pay its expenses from gross revenues, but after expenses are paid, the first 6% is returned to the capital partners. And Marshall Reddick, and we're going to dive into this a little bit more on the frequently asked questions, but Marshall Reddick only profits after the capital partners have received at least their 6% preferred return annual, right? After the 6% preferred is paid, then all other profits are split 50-50 between the capital partners and Marshall Reddick. So we're going to move on to our question and answer.
Yeah. Thanks so much, Pat. I appreciate that. So as we get into the frequently asked questions from the audience, I'd like to share our contact information. So if anybody would like to reach out to us directly, here is how you would do so. Evan and I will be doing follow-up and scheduling calls with you folks that have attended. But for those of you that may want to reach out to us or get ahead of it, here is the contact. You can reach out to any of us, and we'd be more than happy to answer questions. So we're going to go ahead and start with the first couple frequently asked questions, and we'll go ahead and start with Evan.
So I'm sure our first question you guys are curious about is, well, I'm interested. How do I get started? By doing so, definitely schedule one-on-ones with Vince and I, or also Pat. Once you guys have those initial calls, we'll get you guys access through the fund portal. Vince walked you through that previously, but if you guys have any issues, we could sit down and we could figure it out for you guys and walk you through that process. And then from there, we'll help you through the accreditation process. We'll need to get you through that, and Pat will go into detail on what qualifies accredited investor.
Yeah, perfect. Two very frequently asked questions that I get personally on our consultation calls are, what is the minimum investment, and what is the minimum hold time? How long do you have to keep your money with us? Two very good questions. So the first question regarding the minimum investment, our minimum investment is $25,000. And the follow-up question to that is, what is the minimum hold time? The minimum hold time is 12 months. So you would have to have your money within the fund for 12 months. After that 12 months, you can request the money back, and we have 90 days to go ahead and disperse those funds back to you.
Another question you guys are probably thinking as well is how much capital has been raised so far. And to date, we are at 7.65, so $7,650,000, and this number is rising daily, or actually weekly too.
The capital raise is going exactly as planned. It does us no good to raise 25, 50, or 100 million out of the gates, have cash drag, and then be looking to invest quicker than we want to. We want to take our time. We want to invest in super solid first lien debt, the same type of short and long-term mortgages that we've been funding on the mortgage marketplace for the past decade. Okay, I want to just take a quick, we're getting some responses from the crowd in terms of the minimum and how liquid the investment is. So I'm going to go back, as Vince mentioned, the minimum investment is only $25,000, right? So a very low threshold to invest, okay? The minimum hold time is 12 months, right? So significantly more liquid than rental property ownership or directly owned mortgages, okay? After the initial 12-month period, you can request your capital back. There are some restrictions on returning the capital, but those restrictions, which can be found in the business plan, are there for the benefit of all capital partners, right? We certainly do not want to get into a situation like Washington Mutual, if y'all remember, back in 2008 where there was a run on the fund, okay? But the fund is very liquid, and I'll give you one of the main reasons why. I would like to not sell any of the mortgages held by the fund, but there is an easily, readily available, saleable market for performing first lien debt. And in fact, currently, I'm selling some of our long-term debt periodically, and I'm doing that to maintain a good level of liquidity, right? Currently, I have no one asking to get out, so I don't need the liquidity for people exiting the fund, but I have it via selling those loans as needed. But the reason I have sold some is because I'm tracking my pipeline extremely closely, right? And so when I have some big deals coming up, maybe $1 million Los Angeles loan, right, or a really low loan to value bridge loan, right, and I don't have the liquidity, I can quickly move to sell at par or even at a premium some of the fund's holdings. And I can do that to get the fund capital back and to redeploy it into another loan and earn another 2-point loan fee, right? Because the fund earns income not only by earning interest, but also by earning loan fees. So think about how conventional lenders originate loans and sell those loans to Fannie Mae. Why do the conventional lenders do that? Well, they do that so that they can lend the funds again and earn another fee. Marshall Reddick Mortgage Fund is no different, except we're not abiding by the Fannie Mae guidelines. We have no intent to sell debt to Fannie Mae, right? We have our own small private collateral-based niche. And instead, we have our own Marshall Reddick clients who love this super safe, first lien performing debt, who would gladly buy it from us, right? To allow us to, again, to get the capital back, to maintain a good level of liquidity, but also to be able to redeploy the funds again and increase the shareholder yield by lending the funds again and earning another loan fee. So extremely key points to know there.
Perfect. So one other question that we often get is, how is the income taxed? I think this would be a good question for Pat if you go ahead and take that one.
How the income's taxed? Yes. Well, I'm not a CPA. Marshall Reddick cannot give tax or legal advice, right? But the bottom line here is that we're organized as a California LLC. It's a partnership. So as with any partnership, you will receive a K-1 at the end of each tax year, right? So I encourage you, if you're unsure about what a K-1 is, to speak to your tax professional, right? And certainly Vince and Evan can provide some more detail, or myself offline in a one-on-one capacity.
Another question I get all the time too is, can we invest using our retirement funds? Absolutely. Vince and myself are currently using our solo 401k to currently invest, whereas other investors are doing the same in the fund as well.
Yeah, I want to just expand on that a little bit, right? So using retirement account is an excellent way to invest, but realize that you must self-direct, right? If you're using or thinking about using a current employer retirement account, that's generally off limits. There's restrictions there, but if you have a 401k from a prior retirement account, or you have an IRA with a traditional custodian, it's a very easy process to set up a self-directed retirement account with a specific custodian that will allow you to invest in non-traditional assets, such as Marshall Reddick Mortgage Fund. Okay, I'm going to move into the accreditation phase, which is really important, right? Again, you must be an accredited investor in which to invest in the fund, and you can't become, I guess you can become an accredited investor, but it's not like you take a course, right, and you get a certificate that says that you're knowledgeable enough to become an accredited investor, right? Currently, the government sets these standards, and they are older and as follows. So you either need to be a high income earner, or you need to have a high net worth. So on the income side of things, right, your individual income in each of the last 2 years, or your joint income with a spouse or domestic partner, is either $200,000 or $300,000, again, in each of the 2 most recent years, and you have to have the same expectation of reaching that same income in the current year, right? So be prepared. If you qualify under this, this is an easy way to qualify, but we actually do need to see your W-2s or 1099s or K-1s or 1040 tax returns, okay? If you're going to qualify via net worth, right, you don't necessarily have the income, right, no problem, right, but we're talking net worth. It's not that just you show assets totaling 1 million or greater, right? And so we're talking net worth. We must first look at liabilities and debts, okay? And the gold standard in terms of what the SEC says is that we need to look at a credit report, right? So if you're going to qualify for net worth, be prepared to start with a credit report so we can understand your publicly shown debts, right? Your mortgages, student loans, credit card debt, that kind of thing. And then once we establish and we have a comfortability with the amount of debt that you carry, then we look to start stacking assets exclusive of any equity in a primary residence, right? Rental property equity, fine. Mortgage investments with Marshall Reddick, absolutely. Bank accounts, brokerage accounts, 401k accounts, equity in your vehicles, all of that thing can add up to your net worth, but again, it's a net worth. Now, by far and away, folks, the easiest way to cross this accreditation hurdle is to go to one of your trusted fiduciaries, one of your third parties, right? Either your CPA, your lawyer, or your financial advisor. These are folks that are licensed, that are familiar with this type of 506c private placement, and you simply need to ask them, right? Hey, you know me, you look at my tax return, or you handle my trust, or you do all these different things. I'm looking to invest in this private placement, and they need a letter signed by one of my fiduciaries vouching for me as an accredited investor. If you can get that signed, boom, you're done, and we need to see nothing further. If you don't have that relationship, or someone declines to do that for you because they don't want to take on that liability, no problem. We can definitely do the verification internally. You just have to be okay showing us your income or your net worth documentation. Even a third option, if you prefer to become accredited but not show Marshall Reddick your info, you can look to third-party websites such as verifyinvestor.com.
Awesome. Thank you so much, Pat. Very helpful, especially giving all those options for that accreditation process. So one other very common question we have is, how does Marshall Reddick profit from the Marshall Reddick Mortgage Fund? So great question. We touched on that a little bit earlier, but I'll let Pat go ahead and dive in a little bit further on that.
Sure. Yeah, again, in keeping with our transparent nature here, first and foremost, before we get to the profits, I'd like to address the 2% asset management fee, right? So this is very common in private placements, right? And so the fund is very lean and mean when it comes to expenses, direct expenses. Okay, so we're talking about attorney costs, CPA and tax accounting, loan servicing, bank fees, right? That's about it. Right, but how is the fund's affairs managed? Well, they're managed by Marshall Reddick, who is the manager of Marshall Reddick Mortgage Fund. And so that 2% asset management fee, that is a 2% based on the capital under management, right? That is a fee that's paid monthly, and that is not a profit center. That is simply a pass-through to help offset the costs of Marshall Reddick in managing the affairs of the fund, okay? So with that out of the picture, how does Marshall Reddick earn money? Which is an extremely valid question. And any service provider that you work with, you 100% need to ask them how they earn money on your investment. And so same for us. After fund expenses are paid, including the asset management fee, the investors first earn the first 6%, okay? That's 1.5% per quarter. Right, quarterly distributions, 1.5% times 4, we get to our 6% annualized number. Anything above and beyond, right, if we finish a quarter and we have 3% total distribution that we're able to make, well, 1.5% goes to the capital partners, and that means we have 1.5% left. That 1.5% would be split equally, 50-50. With 0.75% waterfalling across all of the capital investors, and Marshall Reddick, the manager, earning the other half of that 50% profit share above and beyond the 6% annualized return. And that's how Marshall Reddick earns profit from Marshall Reddick Mortgage Fund.
Awesome. No, thanks for explaining that. Very helpful.
Yeah. All right. Well, I appreciate everyone's time. And if we didn't get to your question, we certainly look forward to speaking with you one-on-one. Those consultations are extremely important, and that's what we're here for. So we look forward to speaking with you. And again, a big thanks to Vince and a big thanks to Evan for joining. And it's always a pleasure to be with you.